So market's pretty muted today. Investors waiting for Nvidia to report earnings after the close. Let's go to Jack Ablin. He's Chief Investment Officer and founding partner at Cresset Capital. He joins us to talk some more about this. Jack, thanks for your time today.
Good afternoon. Thank you.
Nvidia is reporting after the close. What are you looking for in their earnings report?
Yeah, analysts are looking for a strong quarter based on a lot of huge tech capital spending. We also want to see how the Blackwell chips, now that they're in full production, are performing from a financial perspective, and we'll be looking for the outlook. The fact is that with the tariffs and the H-20 trade restrictions with China, we want to hear Nvidia's commentary about their ability to pass along some of the higher costs that they're going to incur.
Are you confident they'll have an outlook? Some of the other companies have been dropping them.
Yeah, I think there's, at least now we've sort of created some détente with China. So perhaps there will be a slightly wider window from which to forecast. Also, they're focused on pretty much just, one primary product. So I think they should have some adequate view to be able to offer the market some guidance.
Do you see Nvidia as being the indicator for AI build out moving forward? We know there have been concerns about some companies moving slower than others.
Yeah, I think it's a good bellwether certainly for US AI, obviously with DeepSeek and some of the other progress that China's making. I think that's had raised some concern, and now there are new developments from DeepSeek as well, some of the advances there. But on the other hand, gains in Nvidia will certainly help the overall S&P 500, given the size of the company relative to all the other constituents. It's not necessarily going to help provide a backdrop for the rest of the S&P. So I can't infer from a strong Nvidia outlook that that's going to be in any way helpful for any of the other sectors.
Let's talk about consumer sentiment, because the latest numbers show consumer sentiment coming back. It was really low at the start of the year. I'm just wondering what you think is behind that.
Yeah, so I think that the consumer sentiment that was reported yesterday, big surprise to the upside, largely on this reversal on the Liberation Day announcement that took confidence down pretty low. In general, I will say confidence is a pretty good bellwether for retail sales. And right now, even with that rebound, the confidence level is below where current retail sales growth is. So I think that we can't necessarily take that boost as an indicator that all of a sudden American households going to be opening up their checkbooks.
Let's talk.
On the other hand,
sorry, go ahead. No, go ahead.
On the other hand, that a small fraction of households, top 10% of American households, account for half of all spending and the majority of discretionary spending, and they're focused on their wealth effect, the value of the portfolio, value of their homes, and with the rebound in the market, that's a good sign for spending later this year.
What could not be a good sign for spending is Macy's saying they're going to hike prices. They could hike their prices because they have to work through some of the tariffs. I'm wondering if you see that becoming a bigger, widespread thing in retail generally.
Yeah, I think that's going to be certainly a concern, particularly in the department stores and in stores that tend to cater to, less discretionary, more just household, maybe some apparel, that kind of thing. In terms of valuations, consumer discretionary stocks are relatively expensive based relative to their peers, and are starting to lose momentum. So for us, discretionary is really in what I'll call the sell category. So it's not an area in general that we want to play in, although if we're going to start leaning into individual names, we want to focus on high quality companies with a strong cash flow and consistent dividend growth.
Okay, so what are the companies you're looking at? What are the sectors you are looking at?
Sure. So if we want to drill down into consumer discretionary, and if we want to be there, then we want companies like McDonald's. McDonald's, strong cash flow generator. It's got a dividend yield of about 2.2%, high quality company. It's been growing its dividend. We expect it to continue to grow its dividend at an annual rate of about 5% annualized. Another one is Genuine Parts. Here's a way where, you know, if new cars and a shortage of used cars out there will likely continue to push a motorist to hold on to their vehicles, Genuine Parts should be a beneficiary. High quality company with a 3.2 dividend yield, expected annualized dividend growth about 2.5%. That's pretty in our core dividend portfolio. Those are the only discretionary names we have right now. And so our third pick is really from finance. It's Chubb, the insurer. You know, they will benefit from, you know, the insurance rates, which have been rising pretty consistently over time. Strong, high quality company, strong cash flow, dividend yield about 1.3%, but it's growing its dividend at over 8% annualized.
All right, Jack Ablin, I've got to leave it there with you, sir. Appreciate your time in this. Thanks for joining us.
Thank you.